Welcome you all to another session with Vijay Karna. It has been nearly 2 months since I have uploaded my views on YouTube. The main reason is that the viewership is too less compared to the amount of time I spend. It nearly takes around 3 hours, while the response is dismal. I'm not asking the viewers to start liking or to praise these videos, but if they find they are useful, please share the videos to your friends so that they can also benefit from my views. Now moving on to the presentation. In this presentation, we'll majorly discuss the Nifty and Bank Nifty spot, not futures, with the data available up to 23rd June. We are not going into the nitty-gritty of levels anymore, nor into the minor technical analysis, pattern reviews, etc. We are just going to discuss a very broader outlook of the market in the coming few days. Now, moving on, first let us go for a top-down approach by taking the weekly chart of Bank Nifty spot. As you can see here, it has been in a very good uptrend, and only thing that you can see is in the last 3 months we have come into a overbought zone. However, by itself is not a weakness, as volume, which is supposed to be a measure of success of any up move, is still positive. As you can see from the volume wave here, that there is no weakness seen from the volume wave criteria. Though in the last 3 weeks, you can see that the volumes are below average volumes, which haven't supported the up move, nor they have supported the down move. But what you can see is, for the last 2 weeks, the candlesticks are bearish in nature. Now let's move on to the Nifty weekly chart. This is a chart which I have presented in my last video on 28th April. There I indicated that there is still a possibility of a 150 point up move before it faces the resistance from this upper trend line or the maximum reaction line. And we have tested 9700 plus. But however, it has been facing some resistance at these higher levels. Please note that this is not an updated chart. Now moving on into the details of the Nifty spot chart. This is almost similar to the Bank Nifty spot chart. However, this has slightly more weakness as compared to the Bank Nifty spot. Similar to the Bank Nifty spot, the last 2 weeks have the bearish candlesticks, and the last 3 weeks show below average volumes, while as the volume wave doesn't indicate any weakness. It still shows that the volumes are good enough for this up move. Now concluding from the studies of the weekly chart, from the trend and volume wave considerations, there are no reversals yet. However, Nifty spot is facing resistance at the top of multi-reaction long-term line of the channel. Both Nifty and Bank Nifty spot indicates that they are in a overbought zone since April 2017. However, by itself, overbought condition is not an indication of an impending reversal. They can sustain in an overbought zone for a longer time. Though the weekly candlesticks are bearish, but volumes are average and doesn't support a bearish view. Overall, studies indicate exhaustion or possible distribution at these higher levels, and hence some caution is warranted going forward. Now let's move on to the daily charts. This is a daily chart of Nifty Spot. As you can see here, most of the times the Nifty Spot has taken support at 21 DMA and bounced back to make lifetime highs again and again. There were many divergences that were formed. As you can see here, these divergences are stochastic or MACD or histogram, CCI, MACD, etc. But none of them could take the Nifty below 21 DMA convincingly, except for a couple of days during the end of April, where we had a slight dip. This up move was very well supported by the volumes till 9,000 levels. However, as you can see from here, from 9,000 levels, it has been a great struggle. So a lot of distribution and accumulation was going on. And most of the times, due to the dip buyers, the correction, I should not say it's a correction, it's a minor retracement. So the minor retracements were very, very small, and every known support was bought into, and the Nifty always moved higher and higher. As you can see here, this buying volumes were always greater than the selling volumes, as you can see here. The only blip is for the last 2 days, where this particular wave has slightly bettered the previous buy volume wave. Now moving on to the same Nifty Spot with respect to the Bollinger Bands. As you can see here, except for a couple of days, the Nifty was well supported by 21 DME, and again we had a breach on last Friday. But as you can see here, we had Bollinger Band squeeze on 2 different occasions in this up move. And in both the cases, they again crossed the 21 DMA on upside and made new lifetime highs. The structure is almost similar to the Nifty Spot. However, this is slightly stronger than the Nifty Spot. Looking at volume wave, the volumes were supporting the move till 23,400 to 23,350 levels. However, beyond that, the volumes were just below average. Now moving to the Bank Nifty with respect to the Bollinger Bands, like Nifty Spot, the Bollinger Bands has entered into a squeeze mode. However, the price has not breached the 21 DMA, which indicates that the Bank Nifty is stronger than the Nifty Spot. Let's review some other indices which are performing well. The consumption, FMCG, MNCs, and LIX 15 are performing well, and there is no weakness seen, and they are very well supported by 21 DMA. LIX 15 is nothing but the frontline stocks in the Nifty. Now, what are not performing well are the IT, pharma, and metals. However, in the last few days, even the mid-cap 50 and broader CNX 500 are also not doing well. Now, concluding the technical analysis study on daily time frames, both Nifty Spot and Bank Nifty Spot are in a distribution phase. Volumes in both indices are traded with less than average volumes in June, clearly lacking any conviction among traders and investors in its moves. Market breadth is not improving, which is a sign of probable exhaustion, and there is a possibility of some time and price correction to come in the near to short term. When we look from context point of view, which we have already reviewed, that the strength in this up move is stalling in the weekly time frame, and that indices are showing signs of exhaustion and possibility of a move to catch up the value which is still lower in daily time frame. At the moment, both the indices have formed a trading range as of now. However, looking at visualization and objectives, first looking from the bearish point of view, the GST is going to be an uncertainty along with global political and economic events, which can possibly empower bears in the short term. However, from the near term, there are signs of bullishness, and the bullishness comes from the half-yearly closing of June 30th for FIIs and quarterly closing for DIIs. Hence, they may support the market till the month end with all their might to show higher net asset values. So, my view is that we may have a positive week ahead and possibility of a weak and uncertain July month, unless the earnings of majority of frontline stocks improve. As most of you are aware that I have tweeted during 2015 April that Nifty Spot may probe 10,500 to 11,000. I am still a firm believer. Thank you.